Good afternoon, everybody. I'm Michael Filigera. I'm with logicalsignals.com, and this is the Elliott Wave update for the NQ for Tuesday, April 6th, 2021. As we had left off yesterday, we were looking for the market to complete what we were going to be labeling as a fifth wave up as a part of a C wave to complete an intermediate B wave advance, and setting the stage for a C wave decline to begin. Now, I left it that we need to see the structure of this decline now in progress before we can determine which of our counts is going to be in control. Our preferred count suggests we're going to get a C wave down. The alternate count continues to favor continued upside. So we need to be able to cover our bases for both type of moves. It's not a matter of being right or wrong. It's a matter of having an idea of what direction the market's going to be headed and where the intensity of the move is going to come, either to the upside or to the downside. So if we're working on a five-wave structure down, then the intensity of the move is going to be within wave 3, 1, and 5, but they're going to be pointing down. Right now, because of the nature of the wave being a B wave rally, those impulse waves within that rally, the C wave, were to the upside. And you see what I'm talking about. The pressure was to the upside yesterday. And that's what made you way more money than selling, because the bias was up, it was clear. So that's what we'd be looking for if this were to start to come off and indeed be a C wave. Now, what is that potential then for this particular C wave, if indeed it's going to get going? Remember, wave Cs are related to wave A. So we're going to put in some Fibonacci extensions, and actually we're going to take it from the high. We're going to go to this particular low, which is 69.25. And well, actually it was that one, 2207, excuse me. And we're going to go back over here to today's high, 1355. A little bit, we're going to go there. That'll work. Now, so this C wave then really is going to be looking like it needs to pick up the steam, break below our moving average. Again, this is a 4-hour chart. Can open that up just a little bit for us. This is a 4-hour chart. And here we can see right now, moving averages are continuing to favor upside. Some of them, but they're very near term, the 8 and the 4 are beginning to turn lower, but not quite yet. And then we have the 20 still pointing higher, the 50 still pointing higher, the 200 still pointing higher. This market would need to pick up steam and basically come down and break that 200 on the 4-hour, and I can go down to the 1-hour, and it's even going to be a little bit higher. 32.26 on our 1-hour chart to put in the convincing 5 waves down, and that indeed the market is heading lower. Now, I want to quickly take off those particular ones, and now I'm going to put on a different set. And this would be for a corrective decline off of this high. So indeed, if this is wave 1, wave 2, and this ends up just being wave 3 on this level, then which would then suggest we're going to get a continued upside. I will show you what that will or should look like, so that and that's the low. All right, good. That'll work. Now you can see how this shrinks up. And that's going to be 55 right there. Okay. So you're going to see that actually, even if it's just a little fourth wave, let me go back down to that 30. So we can see it. You can see that we basically, okay, where are we going to go? 13,512, 13. That's going to kind of should be it. And I would imagine that if it starts to really decline, that 50 is going to lead the way down. But it's these are the levels. That would be kind of going overboard. But this is the area that it would need to come into. The area of the fourth wave of one lesser degree, and that's right here. So that's kind of coming in touch with the 618, a little bit higher. So you got a zone from 13,531 down to 13,013, we'll call it, or 12. And if it gets into that zone and starts to head higher again, then that favors that the market is going to go up and break this high at 55 and just continue on up as it puts in a fifth wave to complete an alternate count. And right now, though, I'm going to continue to favor that. I'm more favored towards our preferred count, which shows that the market should really begin to drop in a wave C. And that can be very easily adjusted. It remains my preferred count because I'm fairly satisfied with what the market has done moving up to this level. If it breaks higher and breaks above 13,700, that's pretty much going to force the preferred count to go move to alternate and alternate to move into preferred, at least for the balance of April. And so that's why there remains a lot of importance right here for right now. If it drops only in 3, we're going to start to look, and this would be closing, okay? That it drops and closes there, then we're going to begin to favor upside. If it breaks through and it forms 5 waves down and does pick up the speed a little bit, then I'm going to favor that it's the C wave, and we're going to use those others. And we're looking for a move back to 12,000, pretty much at a minimum. Okay. And that minimum would be, it needs to cover this territory here for wave A. It is wave A that wave C is related to. And we'd be looking for a lot more. In fact, I could just throw that up there. I did already. And you can see that we had levels there and they come all the way down. And that's pretty much what we'd be looking for in a C wave. And that would then complete primary wave A within a larger decline. Continued upside would force the market into putting in a little bit larger fifth wave up to complete a cycle level 3. So we'd be moving up with some strength, and we're going to get up to new all-time highs above 13,900. That would be the alternate count. The alternate count would show 1, 2, 3, and this would be 4. And then oh, there, I did have it in there. So the alternate count, I rearranged so to show that this, instead of completing that cycle wave 3, actually only probably completed primary or intermediate. But right now I'm labeling it as a third wave. This would switch to 4, and then we'd be looking for fifth wave up. And this would be wave 1, wave 2. This could be wave 3. Could be wave 3. Possibly wave 3 isn't done yet. And so we'd be looking for even higher levels. But eventually wave 5 would be expected to break 13,000 or 13,900 and likely end up above 14,000 before all is said and done. That's going to match up more with the Dow and the S&P, and the Russell would just seem to keep finding buyers. That still also matches up with the general mood right now, that we're coming out of the pandemic, that we are succeeding in getting more control on it. The economy can open up, stimulus checks, et cetera, people going back to work, jobs being created. Then we're dealing with a whole nother set of givens of some fundamentals that's going to get pushed into the market. Is the market ahead of itself? I think so. I think so personally, but that's another conversation. So right now, for tomorrow, we got our marching orders for both directions. We know what the structure should look like. That's how we're going to play it. We continue to trade what's in front of us as the market moves through its ebb and flow. So we're looking for continued downside. Even in the basics of it, it's only a little 4, but play it as you see it. And what I mean by that is look at the 5 minute. The 5 minute has a lot of wonderful trading opportunities in both directions. Those are wonderful rallies, and you play them with your moving averages. More on that. If I ever get a trade room open again, then that's where that would come in, because we put those into place every day. Right now, the hourly charts, moving averages continue to favor upside. So it's going to take a while for this boat to turn around in terms of the moving averages. These are going to be fluctuating. You can see they're all bunched up on each other right now. That's it for tonight. The next update will be Wednesday, June 7th, Wednesday, April 7th. How about that?